Okay, it's Monday, August 24th, 2020, and this is your weekly look at the absolute latest Altos research data that came in over the weekend for the entire US real estate market. Little housekeeping before we dive into the data this week. As a reminder, all of this data is available to Altos subscribers. If you're a realtor who's interested in being the voice of expertise and guiding your clients to the best buying and selling decisions right now in this crazy market, then you should head over to altosresearch.com and subscribe. Subscribers also get our invitation to our monthly in-depth webinar, which will be Thursday, September 3rd this month. We'll be focusing this month on how to use the data to answer some of the tough consumer questions right now. So many people want to know if this is a good time to buy, they're afraid to commit or afraid to miss out. So if you have clients right now who need some of these difficult buying and selling questions answered, make sure you're on the webinar next week. Sign up at altosresearch.com to get that invite. Okay, on to this week's data. With 73,000 new listings hitting the market this week and a little more than 80,000 transactions, total inventory is now under 600,000 for the first time ever. At 593 single family homes on the market, we're 1.5% or so fewer than last week. You can see the 5 years of inventory cycles in the top chart here. In 2016, in the blue line, you can see at this time of the year, we had 1.1 million homes on the market, and it gets generally getting fewer each year as rates have been ultra low. On the bottom chart, you can see our new listings volume is actually about normal for this time of year. So this implies that this whole crisis is really a demand-driven phenomenon. It's not for lack of homes being sold, in an acute sense. It is the end of August, and buyers are going as strong as they can still at a time when they normally would be backing off. As we've discussed in these videos and others recently, this is really because mortgages are insanely cheap, and Americans' personal savings rate has skyrocketed during the pandemic time. So home buyers actually have more money for things like down payments. So if you've kept your job during this crisis, it's been a really, really good time to own real estate. By the way, new listings volume will probably dip next week as we have fires in the western U.S. and hurricanes in the southeast. Then these things disrupt our ability to get new properties to come to market, at least for a week or two. So expect that. Home prices have stopped their counter-seasonal climb. It's been unusually spiking, but they've been flat for a month now. And frankly, this feels healthy to me. I would have been very anxious had prices continued to skyrocket each week. So expect September and October, these to ease back down a little bit so we can reset January 7th and start the new year. The new listings prices on the green line on this chart here have held up significantly. And that is really your leading indicator that transaction prices are going to stay probably 8% higher than last year for the rest of the year. There's no signal of prices pulling back anywhere in the data yet. Finally, this week, I want to share the Altos Market Action Index with you. The MAI is a barometer. It's a at a glance answer to the question, how's the market? The MAI is an algorithm that it balances supply versus demand. In the data shows that the MAI above 30, these are seller's conditions, so with demand sufficiently high and supply sufficiently tight, that prices will be rising in the future. Below 30 are buyer's market conditions. Nationally, we've been in a 10-year real estate bull market. And we haven't really seen buyer's market conditions for a long time at a national level. In the top chart, you can see how the little speedometer works, and we're well into the seller's market territory for the country and climbing still. You can see this at the local level too in the your Altos reports. New York right now in Manhattan is really one of the only cities with buyers market conditions. Even San Francisco condos are balanced, are close to balanced, and more close to buyers conditions than they've seen in a decade. But still not really in buyers conditions yet in San Francisco. In the bottom chart, you can see this the MAI in its year over year comparison. You can see normally there's a seasonality with the typical demand peaking in June. In 2018, it peaked in May, and we had a strong pullback in the second half of the year as interest rates rose. So this year, though, is simply off the charts. And my biggest fear really for demand and home prices is when we see mortgage rates, if and when we see mortgage rates start to climb again. I fear that the market is very, very sensitive to rates. As of right now, they stay low, prices are high, demand is off the charts, and hasn't shown any of its seasonality pulling back yet. As always, visit altosresearch.com for the full details and subscribe to the YouTube channel to get these videos. Stop by Altos and make sure you get the invite for the webinar next week. Share comments and questions if you have them on what the market is or what your clients are asking. We'll try to dive in. More data next week. Thanks, everyone.